what's up everybody? Time for another market update. Okay, so as we head into the second half of summer, we're experiencing some seasonal slowdown, as we typically do. Even in a good market, July and particularly August are usually our slowest months of the year. Why? Well, a couple of reasons. One is that a lot of people are out traveling, and that's never been more true than it is this year. There was so much pent-up demand for people to just get back out there and start traveling again. The second reason is that for families that are moving to different areas to get into new school districts, they've probably already done that because school starts in the next couple of weeks. Good luck to parents. And the third reason is that it's hot. It's just hot in July and August, so more people are at the beach rather than being out at open houses. Now let's talk about what we're actually seeing in the market. Well, the Fed raised interest rates a couple weeks ago, as they said they were going to, this time by 3/4 of a point. But you know what's interesting? Mortgage interest rates didn't budge. That's right, they didn't move at all. So even though the Fed is continuing to push rates on their side, mortgage interest rates, conversely, have actually come down a little bit. In the last 30 to 45 days, we've seen mortgage interest rates come down to where they were a few months ago. I was pricing out a deal the other day on a jumbo loan, and the rate was in like the high 3s to low 4s. So why is that? Well, a couple of different reasons. One is going to be that, as I've said before, rates oftentimes rise a lot faster than they fall. When they rise, it's more panic driven, it's in response to something. So when the market started to tilt a little bit, rates shot upward. But they fall in a way that's more calculated and more gradual. So I think banks baked in what they thought was kind of the worst case scenario pricing, which has not come to fruition yet. So they're kind of backpedaling a little bit and bringing the rates down. The other reason is that, simply put, banks are in the business of lending money. If they're not lending money, they're not making money. So a lot of them have lowered their own interest rates to try to entice people to buy back in the market and borrow from them. So what does all of this mean? Well, if you couple this together, what's interesting is if interest rates can stay relatively low as they are right now through what is the slowest time of the year, it could look really encouraging going into the fall. We usually see a nice little kick coming off of Labor Day that propels us into the fall selling season, which is usually a very good season for us. And I think that you might see a renewed sense of confidence for people to want to get back into the market. If you're a seller right now, it's a good time because there are people out there that are still trying to capture these low interest rates while they're available. And if you're a buyer right now, frankly, there's less buyers in the market being that it is August and there's less competition for you. So, in summation, we're still not sure where this is all going yet. You have to keep in mind, this is still the infancy of this cycle. What we do know is it's not the doomsday scenario that so many people were forecasting and portraying. So with that said, who you listen to matters, staying informed matters. If you have any further questions, obviously feel free to DM me directly, and look out for more updates soon.